The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, a market day. And as you know, the last couple of days, I've been talking about a very quiet stealth pullback based only on the technique that I use in the Chapman wave of counting each successively higher peak. There were very, very few indications that there should be any kind of a pullback of more than 45 Dow points, maybe 5 S&P points, in other traditional ways that I'm looking at the market. But based on the expectation that we could get some kind of a pullback using the technique of higher peaks going to a D or an E, and in some cases even an F, fourth, fifth, and sixth highest peaks from the most obvious low bar, this to me says this is a moment where you've got to be a little bit careful. Why? Because as I've been talking about for a little while now, the market in this last phase has gone up on good news. It's one thing going up, you know, I think it was Marty Zweig who created the expression, climbing a wall of worry. Well, this climbing the wall of worry works until it doesn't work. But it doesn't work when you're starting to get good news. I always get very, very nervous when you've gone through any recessionary period, and then all of a sudden we start getting reports about good news. So what I've done for my subscribers on my opening call, we started setting up more shorts, more positions on the short side. Who knows if they will all work, but we've started doing that, number one. Number two is that we've kept the long positions because those long positions had been working. They're kind of under the radar stocks. Just have a quick look here. Yeah, one is down just a fraction, which is fine, and one is up quite nicely, up 1%, over 1%. No, don't speak out of turn. Yep, over 1.74% today in a market that basically is down. Dow's down 91 at 16,854. S&P's down 6.5 at 1944. You got the comp index down 4 at 4,333. Gold is running just a little bit up 2 at 1262. This is going to be really an important phase for gold, because if gold isn't seen as a harbinger of fear in this particular currency of fear mode, I don't know what's going to get it to move up into the 13s again and hold. So let's look at it this way and say we're waiting to see if gold can produce, because some of the gold stocks and silver stocks had a fabulous couple of days. I mean, you know, nice move off the bottom. And usually that precedes a move in gold. So let's just watch it closely. Up until now, the expression I've used often enough is that you sell at your own risk, and you sell at your risk, and you at your peril. I think that's changing. And we're going to look at why I think it's changing for now on the shorter term. Meantime, back at the ranch, you've got crude oil up at 104.5. You've got copper down. Copper is, I just want to put this in. Copper is just now starting to consolidate that huge gain that it had. It's given back all the gain that it had. Sorry about that consolidation. That's it. Oh, no. I'm looking at the daily chart. But the weekly chart's given back almost half of the gain since the low back in March and the high back in, is that May? May the 30th. So I'm going to be watching copper closely. So far, it's just kind of neutral. It's in that middle area. So nothing to talk about other than to say the daily has made that arch formation that I always talk about. And the big thing is if it closes under 3.01 in the continuous contract, let me just get you, am I going to get you a U contract? Let me get the U contract. And a U contract, which is A, B, C, gone to peak D, I believe, if it goes under 3.009, that's a problem. and then it's going to give back a chunk in the weekly chart. Now, this is going to be very interesting. Why? Because if you look at the TLT, TLT is trying to find some support. Little doji candle the last couple of days. It's trying to bounce off the 110.83 area. Let me just type that in. 110.83. And what it's saying is that if this week it closes underneath 110.50, let's call it, let's be safe about this. It's under 110. That's negative action. That means that yields are going to go higher. But if it starts to climb and it goes above 112.50, wait, on Thursday, Friday, we only got 2.5 days. If it goes above 112.50, money will be coming out of stocks, going into bonds. Right now, wait, I have to finish this and I can go to the other details that I wanted to look at. So the dollar is attempting to rally to get back into that inverted Roman candle. So it should be doing it because it's crossed the halfway point of the wick. It's crossed 80.85 on the on the index. So if it closes above 80.87, it's at 80.77 right now, then there's a chance in the next couple of days it's going to test and maybe even break the 81.02 high of the 5th of June. And if you put that into context with the euro right now is about to test, it's done exactly what you talk about when you're looking at a Roman candle. And this particular instance, it would have been a very bullish Roman candle from the 5th of June. What's the Roman candle? It's Chapman wave technique that I use, identifying a particular design, a shape of a candle, where you've got a long wick, and there's the red candle with a long wick, and there's the green candle, and they have different implications. Implication of the green candle is that it could be a really good turnaround situation, but you got to close 2 out of 3 days above the high of the wick of the day of the Roman candle. In this case, it would be 1.36690 in the euro-dollar currency pair, and it's the opposite. In fact, looks like we're going to test the 1.350 lower the and that's going to be very important. So then I just want to look at the USD JPY. Then I want to go through some things. Look at this. Only giving back all those gains. It looked like it was a great move right up until the close on the 9th. And all of a sudden yesterday and today, whoops, it gives it back. Not good currency moves. I want to do also XAL. Most people don't look at the XAL. This is the ARC airline index. Trading at 86.39, down $1.60. Chapman wave methodology, what we try to do is identify the lowest, most obvious low bar, that's 75.02 from back on April the 15th. 75.02, made a count each successively higher peak. That took us to a peak E, doji high, on the 9th of June, pulling back a close, say 86.40. I would have to say that a close in the next 2 days under 85 would be pretty negative, and say for the first time we might be seeing crude oil start to break out as the airlines are impacted. Now on the weekly chart, A, B, C, D, E. I have an alternate count. I'm going to put it in as a C/E, giving at least the benefit of the doubt right now to the weekly chart on the way up. But all I can say is that at 86.35, a close on a weekly basis below 83 would be a heads up to say, watch out. LI index has had a vertical move in the monthly chart. It's a spectacular move for about a year. It has not made a peak. It's gone from peak E that was made July of last year to this month, June, all-time highs, and no peak since then. This is still like F, maybe /B. So very impressive move in the airline index. I suppose someone spoke to me about JetBlue the other day, or asked me in an email. Yeah, JetBlue, I'm going to call this F for now, and there's a chance it could go to a G, but I don't think this is an instant restart going all the way to a whole brand new D, E, and F. So let me just make it real clear. JetBlue is a spectacular move. This kind of move usually creates a kind of a flagpole flag, and it's at 10.46 JBLU, down 17 cents at 10.46. My suspicion is that this will turn into a peak F in the next week or two if there's no new high, or even if there's a momentary new high above 10.63. But if 9.60 is taken out to the downside. My suspicion is we go down to the 942, 930 area. JetBlue starts to consolidate in a rectangle formation, getting ready maybe for the next takeoff. But at this particular period, I'm still calling the monthly a leg F. So this is a very important period for the airlines. So one of the reasons why I want you to raise the stops and long positions, why I want you to add to the short positions, is that even with the rotational aspect involved, when you get, now I can do some technical stuff based on the Chapman wave. SPY. Look, the SPY has made a peak E. It could be an instant restart in the Chapman wave. I don't have any signs yet that say to me that it's going to be. I have more signs saying there's a good chance this is a peak E with maybe a sporadic, just a momentary move higher above 195. What was the high 2 days ago? 195.35. But everything about it says we're in a period, 5.35, I think I said. We're in a period that is apropos to some digestive consolidation going on in almost all the indices. Look at this, New York Stock Exchange, NYA.X. All right, to type the right one, you get the right one, NYA.X. Look at this, peak D. A weekly chart, leg D, right up against, I wanted to show these monthly charts, weekly and monthly charts. Leg E in the NYSE monthly. Leg D in the weekly, right up against that long-term resistance line, a break above the green line, a break of the NYA into the 10,970s. Let me just say, a close above 11,000 in the NYA. Very positive action, just really positive action. At this point, I'm saying, show me. I'm kind of cautious. The technicals are great, but the Chapman wave methodology is what we use. Well, let me just do this real quickly. I think we're about to go to a break. Yeah, let me just show you something here. I'll go to the, let me go to the IY. C. Okay, yeah. So in the IYC, this is a good example. This is the Chapman wave methodology. What you do is you identify the lowest low bar. From that, you merely count each successively higher peak. There is a Chapman wave song that I made years ago. Then it goes, the market goes up, the market goes down. Supposed to buy at the low and sell at the high. And you snap your fingers and you go, snap. But you know what we tend to do. Buy at the high and we sell at the low. Chapman wave is what you need. You buy with a stoke. That's the stochastic. And the MACD, follow the wave. What? No, what? Follow the price and wait. Higher highs is what you see. Wave goes to A and then to B, even the anticipated C and D. We'll be back with the song. And I'll finish it up for you as soon as we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So just real quickly, let me finish that off because there have been a couple of little requests there. So the wave goes to E and then goes to A and then to B, even the anticipated C and D. That's really the objective, is to get you to 4 higher peaks. That's when it flashes a cautionary light, but all you got to do is make your stop real tight. Suddenly it flashes a cautionary light, but all you got to do is make your stops real tight. And then, this is the way it works, and sometimes when you go to an E and an F. And, this is the one that goes, suddenly it goes to E and F. A bell rings so loud it can make you deaf. Or what you're going to do, which way to go. You sell at the high and buy at the low. That's ideal, of course. So, with that in mind, we want to go straight to our first caller. We got John in Philly. Get back to reality. Hi, John. How are you?
Hey, I'm very well, Basil. Thanks so much for doing that market overview. That is incredibly thorough, and I do appreciate it.
My pleasure.
I wanted to mention to you, we spoke back on May 21st, and I had actually took action on that day where I bought IWM at 109 and change.
Whoa, nice.
Actually, I got a signal the same day at the end of that day on the NDX at 3630 and was long that as well. Now, both of those instruments have rallied 5 to 6% since.
Right, very quickly.
And I'm of the view, similar to yours, that it is likely that a tradable top is not yet in place. So that's my speculation. But I'm always looking to protect myself and not get into the position where I give up very nice gains.
Correct.
So what I wanted to ask you, if you could please, and focusing on the IWM in particular, Can you go through the thought process of what you'd be looking at and looking for to tell you this is not, in fact, headed higher over the next couple of days and or weeks, and that you definitely want to be out of long positions? Could you share that with us, please?
Oh, so it's a really good question. And the gist of your question is this just a short-term top that could take 3 to 5 sessions to consolidate and then we go to higher highs? Or is it going to be longer, deeper? Because if it's longer and deeper, then even long positions, regardless of how this is an unusual situation, they should be coming down. So to answer that, I'm going step by step, and let me explain what I'm looking at. Very often, going to highs, the MACD, the moving average convergence divergence, one of the techniques, one of the technical tools that I use is a set of moving averages that are set up in a particular way. What I look for is in the combination of the MACD, the MACD, and the slow stochastic. If I'm starting to see price appreciation, this is a little bit like some people look at volume, but I look at the technicals. If I see that the price is going up, but there isn't a commensurate move to the price appreciation on either a percentage or a visual basis, I'm looking at it as a divergence. Every once in a while, you get every single thing intact. And there is no technique that's going to tell you, unless you're using something like a DeMark that gives you a number 13 or whatever it is, or in my case, a particular D, E, or F, a letter, there's nothing that's really going to tell you that that's the bar that you should switch positions if you were long to short or vice versa. So what I'm doing here is I'm setting up situations on a time basis. That's what I've done today. I said at a particular time, if such and such an index is below such and such a price point, subscribers can then go into the short position on that particular instrument. That's number one. I'm still keeping fairly tight stops. And here's the reason. I've seen enough times where a peak as there is in the IWM from the low of 107.44, you'd love it to be 177. 107.44.
Wouldn't that be great?
107.44 has moved up. There's no other way I can count it as a peak C because it went to a lower low from the left side low of 108.66. That was the last trough on the 15th of importance on the 15th of April. So the other thing in the IWM, because it's underneath the previous all-time high, the all-time high, it could fail at any point. If it was going to new recovery highs after a long period of declining, or if it was at all-time highs right now, I'd say very seldom you get a peak C to fail at all-time highs. You usually get to at least a D. So I'm in the situation that says, there's a break coming up. Do you mind holding on so I can finish my thought?
I will, Basil. Thanks so much.
Okay, so we've got John in Philly holding on. We've got George in New York holding on. And we've got Ben in Tallahassee holding on. I'll be right back. Dow's down 91. S&P's a little bit better, 0.36 instead of 0.54% down.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
And Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So let me just finish up. John couldn't hold, so I'm going to just quickly go through what I was looking at before. IWM, the iShares of the Russell 2000 ETF, trading at 116.05 is down 60.62, down 0.54%. Same as the Dow, but the S&P is a little stronger. So this is what I'm looking at. There's a chance that there could still be a leg D. It doesn't have to be. If you're long, I would make it real easy. If you got a really good gain, I would do two things. One is I would absolutely take something off right now. And the other is, I'm not yet sure I would be going short the TZA with the TZA, because it's holding well and there is a chance that it could pop up a little bit higher. But here's what I'm really looking at. The 120-minute chart has got this pattern. I call it, it's like one of those galleons from the Renaissance period or whenever it was, with all those guys rowing, and then it's got that kind of horse's head at the top. And what would happen in this particular instance is the left side lip of 115.02. To me, that's critical. If that's taken out, I would immediately start exiting the other part of my position. That's on a conservative basis. If it was actually me and I was in the situation because of what I'm looking at right now, and I'm actually quite concerned about the market at this particular point, I would definitely be taking off I'd be taking off 2/3 and keep on 1/3. And I would be testing to see whether or not I want something that's the inverse on the short side, only because if that 115 is taken out, there's a real good chance that you're implying that the Dow is going to break under 16,770, somewhere around there. That'll be very negative. And the S&P finally will accelerate and start to see it move in line, and will start to push underneath 1935, no, 36, 35, that area. So I'd be taking a chunk off. I would keep a little bit. And my other thing would be this. If there is a rally and it goes 1 penny above 117.48, I would tighten up the stop on that third position or whatever's left really tight, and hopefully get taken out. And if it goes high, that's fine. I think that it's bumping in tremendous resistance. That's the IWM. I hope that helps you. And the weekly chart is the one that's going to be a single A up, leg A up, or a failure pattern. We just don't know yet. I'm watching the weekly and monthly every day. I watch this real closely, because if the IWM starts to take out the 114 and then the 113 level by a week from today, Wednesday week, that's going to say, hey, party's over for now. Be really careful. I'd rather be very cautious than miss out on the next move up, because if it's a spectacular move to the upside, you'll have plenty of time to be jumping into other areas. You'll be able to get into something. So that's my plan right now. So let's go to our second caller. We got George in New York. George, how are you?
Basil, good morning. How are you today?
Good morning. I'm well, thank you.
Very good. Basil, today I'm looking at Diamond Foods. DMND.
Now, this is one I can't remember what the situation was. I looked at it a long time ago, and it had a spectacular move to the upside. Went to a peak F back in 2011 in the monthly chart, and then plunged from the 96.13 area back in September of 2011. It takes a little dive, and it goes down to 12.85, and that wasn't the 2007 crash. That was the 2011 slide. That's a big one. And now what it's done in the monthly is gone A, B. This is leg C. The big question is, will it make a D? And I'm kind of hesitant right now. So I go to the weekly chart, and it's got the pattern that many folks here at TFNN use. It's like an A to B equals C to D potential pattern. That's that lightning rod, sharp move down, sharp move up, and then an immediate breakdown of everything. In my case, the 200-period moving average, that's negative. Now we look at the daily, and the daily says, wow, the 200-period moving average should have been some kind of support at 27.49. Folks, we're looking at DMND. This is Diamond Foods, Inc., trading at 27.08, down 62 cents. Now the question is, I know that periodically it's discussed, and it seems like there are good fundamentals with this company. So why they seem to, you know what? I know this company well. I remember back when Kramer pointed it out years ago. I don't even know how many years ago. And I remember looking at it, and every once in a while, like in December of 2008, it just takes a dive. It went from 32 down to 18. I mean, that's a dive. And it does that periodically, and it's always because of missteps. Something's gone wrong. So it's a company that's fraught with incorrect decisions, and it shows up on the stock. And then, because it's such a good company, otherwise, or their products are so much in demand, maybe, they keep moving higher. So I'm looking at it as this is the period of the decline. Where would I like to get in? And I'm going to say to you, George, the candle that I'd be looking at is the weekly candle of the 14th of March that has a high of 26.85, just a tad lower than we are right now, and a low of 24.02. If within the context that we're looking at, let me just do this here, just do it in absolute equal 1-to-1, the way I like to do it, 1-to-1. I think it's almost there. Oh, it's already gone past the 1-to-1. I don't see anything yet. I'm suspecting that even if there is a bounce back to the 28.5, 29 area, it's going to come back and retest whatever the low is this week. If there is some kind of a low, I'd be really careful with the stock. But what I will suggest is that you can start nibbling if it gets to somewhere into the 26s, maybe just a tad lower than 26. You could start nibbling. That sounds good. On Diamond Foods, you can nibble on Diamond Foods but it's only a nibble because this one usually takes quite a while to form the base, and once it forms the base and it tests it and it's successful, it starts a really nice move to the upside. And that's the only way I would do it. I want to find some kind of support, and at this point, it's the first time in over a year that the weekly chart is decisively broken under the 9 EMA. It usually doesn't do that for more than 2 sessions, and then it spikes to the upside. I'm going to watch it closely. 2847 is the weekly 200-period moving average. That's key to me. If it can't break above that between now and early next week, I'm going to be saying, uh-oh, it's going to need more time. But, yes, the monthly says keep an eye on it because they were doing things very nicely.
There's also a gap at 1913.
Oh.
I'm thinking, based on the volume decline of the other day, that this has a good chance of coming down to the gap eventually. And I also, based on a fundamental analysis of the company, presently it really is overvalued. Presently.
I see. Okay. So I think we're on the same wavelength here, that you need to wait, you need some patience. It is a stock that when it starts to move, they seem to get everything right, and those rallies last for a long time. So you just need a little bit of patience. And visually, my eye says that you should know by the last week of June, the first week of July, if it's about to form some kind of a base that's a nice intermediate-term tradable base.
Very good.
Thanks for calling in. Good eye.
Greatly appreciate it.
I'm going to turn the pages of my book and put it down for some time. That'll be appropriate, and then I'll just put down.
Let's look at it below 26, Basil, because even the 26 level is a little too high for Diamond Foods.
Oh, okay. That's good to know. Okay.
That.
Good.
Yeah.
Thanks for bringing it up. Thank you, George.
All right, Basil.
Have
be
a
well.
great day.
Thank you.
Well, let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. Thank you.
My pleasure.
Could you go to a weekly chart in the SPY?
SPY. Okay. Oh, good. You got a question. It's going to be a good question. What's your question?
Well, if you look at weeks 4-7 through 421, what did you have for a letter?
Okay. Hey, that is really a good question. And I meant to discuss it. I was going to discuss it on Friday. I don't know. I wasn't here Friday. I was going to discuss it on Friday's show, and I didn't.
I think it's peak C, right?
Okay. Let me explain what I've done here. There are times, and this is one of the reasons why doing this with a computer would be fantastic for a moment, and then there are questions that the eye can see so quickly, but it's almost impossible for a computer to go through the different alternatives without messing up all your other situations. What I've done, folks, in the SPY, this is the SPDR, this is the S&P depository receipts, this is the trading vehicle for the S&P. In the daily chart, at this particular point, we've gone to a peak E at 195.35, days young. I'm watching 194.11, and why I'm making a fuss about the daily is I have some indicators that are saying, watch out, very overbought, we should be selling off. If we don't sell off, then there's a best-case scenario of a high-level consolidation, and that would make the 194 to 193.20 area sacrosanct. If that holds, that's going to be really important. You're looking at time rather than price. And then I went through so many convoluted notations in the SPY that I thought I was going to be as strict as possible and go from the lowest low bar of consequence, and that's the one back on the 16th of November of 2012 at 134.70. And I counted very strictly A, B, C, D, E, got to a top at on the 24th of the week of the 24th of May. This is the weekly chart at 169.07. Pulls back in 6 bars, that's 5 or 6 bars, goes down to 155.73 and establishes very clearly an up channel. That's number one criteria that I wanted for this particular analysis. Then I start a brand new buy mode. It goes peak A, B, C, D, E, and it goes to a doji high. I love to get doji candles at tops because that's important to me. And at 184.94 on the week of the 17th of January, 2014, I get a doji candle and a very serious 3 bars plunge, and we go down to the February the 7th low of 173.71. Then that was a big question for me. Is it a peak F at 188.96 on the 7th of March, or is it a brand new A? Well, what I decided was that I was going to make it an alternative wave count, and the very next one, and let me just extend this so we got all the little apples in line. So this is going to extend to the right. Let me extend this to the right. I want people to see, if you're looking at Tiger TV, Tiger TV is absolutely fantastic. You see our charts. It just allows the explanation to unfold visually as well as orally. Now look what happens. That peak, if it was a peak F, it made a higher right side high bar when it pulled back on the 11th, but you already had a higher high, so that has to be F and maybe G. So now we pull back, so that this is going to your question. So I have alternate count F/A, the week of the 7th of March, at 189.70. The week of the 4th of April, I have G/B. It pulls back and it holds the up channel. See, for me, I'm using all my tools possible. Why? Because if I do that, it allows me to say, oh, but wait a minute, I forgot about, and it could turn out to be a very important factor. So now what I'm looking at is that there's an up channel with an inside track going up, and there's an up channel with an inside track going up, but it's at the bottom. And that's the one is the buy zone, and one is the sell zone. So here we are at breaking, and so let me just tell you, at 189.70, the high of the 4th of April, we get to two parallel highs, 190.42 on the 16th of May, and 190.48, 6 cents higher the following week. So what I did is a little while back, I put that in as a red. It's what I call in the Chapman wave methodology a phantom peak. And one of the reasons I did it is I wanted to be as conservative as possible to say, if there's a chance that we go not to this here, which would be peak C, and then I'm waiting for a D, but because it was so close, and I have so many of the other indices, like, let me just quickly do this, like the Dow, which is in, like the Dow, which is in leg D, like the NYA, which is in leg D, like the QQQ series, which is in leg, well, it's made in what I call a right arm extension, possible E to B. But when I'm getting everything lined up, I found that it's really important, if there is another technique that is viable and within my framework of called the Chapman wave methodology, in this case it's the phantom peak, and it's necessary to use it just to be ahead of the game. It doesn't say to me that I can base all my work now on the weekly chart of the SPY being in leg D, because officially, absolutely on a strict basis, this is really leg C. That's kind of the way you're looking at it, right?
Well, I'm not quite sure. That was really my question. Is what did you have at the time of what peak was the SPY in week of 4/7 through 4/21 is really my question.
All right, that's a great question.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we're back. So we're back, and we're talking with Ben Tallahassee, and we're looking at the SPY and want to know about the Chapman Wave count. So let me just do this real clearly. I'm calling the low of this week of the 7th of February at 173.71, the most identifiable low bar. I'm calling the 7th of March. I called it at the time F/A, and then I called the high of the 4th of April at 189.70. I called that G/B. Then you got the pullback. The moment it takes out 189.70 by 1 penny, I have no choice but to look back and say, gee, it has to be C, because there's nothing else that I can do. Does that answer at least your question as you posed it? Ben, you there?
Yeah, I'm here. Are you there?
Okay. Yeah.
Okay.
So does that answer your question that I had a G, and the moment you took out 189.70 by 1 penny, I had to call it a C, but that's really leg C, and we are still in leg C officially. I have chosen to try to have everything in sequence so that I'm not out of sequence, to have that as a phantom peak, the highs of 190.42 on the week of the 16th of May and 190.48 the week of the 23rd of May as what I call the Chapman Wave phantom peak, because it's so close. And then the third bar, you break out to the upside. And that means that I'm calling this, let's call it a phantom D right now, but officially it should be leg C. I just feel that so many of the little ducks are in order to say that we're in a phase here that could start to see a digestive period that I just want to be in place to identify correctly that there could, in fact, be a deeper pullback if the SPY starts to take out the 193 support, 192 in the weekly chart. Does that help you?
Well, the big question was during those weeks, you see the stochastic, you see here, it dropped down to, I think, 70%.
Yes.
And the big question I had was, do you bias toward the letter side, the stochastic side, or what? And to me, and I'm not sure if this happens more than often, but because I missed this big last upturn, and I'm looking back, and I'm like, okay, what did I learn from this experience? And what I'm thinking is maybe what I learned here is that I biased toward making another letter, that the letter becomes stronger than the stochastic after you make a peak B or a peak C. Is that a fair assessment? Because if you look at...
I often talk about price, and I say price is the arbiter of the trend. That's how we get those high-level consolidations. We might even be right now seeing a high-level consolidation. If the VIX starts to drop below 11 again, that's buying pressure. So, you know what? That's a really good question. Let me think about it, and I'm going to put it in here for Friday or Monday. I'm going to spend some time. It's a very good question. It's a question I don't want to make a blank statement. I'd rather do a little bit of work. But my bias is that to say you're correct because it's based on price. And if the price is going up, the letter's going to go up. So let me just talk about... Yeah, if you
want to save it for tomorrow, that's fine.
Yeah, I do, because... It's not. Do not want to make a statement here that
because you're 10 points below the 80 mark, which is that key stochastic we're looking at. Right.
Absolutely.
And then if you just take that into account, but it's like, okay, it'd be great to know what you're thinking at the time as far as what seems to be more important. I made a peak A, I made a peak B, peak C.
So just to sum it up real quickly before we Larry Pesavento takes over, I also want to use the dailies, because the steeper the daily and the sharper the pullback, if that doesn't show up significantly on the weekly, that's going to be a high-level consolidation. I will talk. It's a very good question, and I'll talk about it. There's something else I actually wanted to talk about, which is directly related. Let's see if I can put it together. Hey, thank you so much for calling and bringing that up, Dan. So that's Ben Tallahassee wrapping up my services, the opening call. Check it out, folks, and stay tuned for Larry Pesavento.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.